it is to the best benefit of anyone moving to the US to connect with an international tax attorney and a CPA who knows international tax. I cannot understate the importance of being proactive and doing proper planning before you become a successful business. The way I see my clients and my contacts, I want to assist them. I want to have them enjoy their time in the US. I really strive when I have a good relationship with my clients, and there's nothing that I enjoy more than seeing them be very successful with their businesses. We are here to help you. We are here to make you do it right. We are here to let you sleep.
Patrick Fundaro here, founding partner at Visa Franchise. Excited to have a special guest, friend, and advisor to our clients here at Visa Franchise, Jorge Obén. He is a lawyer by trade and actually spent time working at the IRS. We have a lot of our clients that have questions about pre-immigration tax planning, tax changes, that big, beautiful bill. So I thought it was well overdue to have Jorge on our podcast. And then just a little disclaimer, as he is an attorney, this isn't individualized legal advice to you. This isn't legal advice. This is a conversation talking about what Jorge's experience has been working at the government and a little bit about what he's seen in the current market now in 2025. So Jorge, thanks for joining today.
Patrick, it's good to see you. Thanks for having me.
Maybe we could start just like a little bit with your background, because you have a unique background and not many people you come across are involved with international tax. It's a very daunting subject. So maybe before I jump into the questions here, you can talk a little bit about your background.
Hey, you want to come to the US, get to E2 visa, L1, or straight out a green card? We've been doing this for the past 10 years, and we wrote a book. It's called Own Your American Dream. What is special about this book is that we went back and have spoken to 21 successful applicants who opened up their businesses here and who are continuing to live the American dream. Hear it from them, because they talk about their fears, their mental state, what went wrong, what went right. The entire blueprint is there. You could just buy the book right here. You can just read it and make up your mind. Continue your video.
Sure, Patrick. I'm an international tax attorney. I'm based in Washington, D.C. I've been here for over a decade. Little did I know that I would end up in Washington, D.C. I grew up in Puerto Rico, close to the water. The life has taken me here, and I love it. D.C. has this unique thing about tax. It's the epicenter of a lot of the legislation, the policy, the controversy. And there's a big advantage for anything tax to be surrounded by DC folks. So before joining the current firm, Procopio, I used to work at the government at the Office of Chief Counsel for the IRS. It's basically the law firm for the IRS agents that most of your clients, most of the individuals work with when they get examinations or they get information requests or they're trying to resolve an issue. It was a great experience. I used to work on policy issues. I wrote many regulations. I addressed many taxpayer inquiries. And I also had a chance to work on the Hill with the House of Representatives at the Ways and Means Committee, drafting actual legislation. It was a very good experience to be on the inside and just to understand how things happen so we can help clients, now that I'm out of the government, address issues, plan to avoid issues, and get ahead of any issues that they have. As you may know, the international tax rules for the U.S. are very complicated, and it's really helpful to get ahead of it and avoid, whenever you can, any issues.
So Jorge, being on the inside of the government, now moving to private practice, what's that transition been like? And what are some of the insights that you've been able to pass along, having spent all those years working at the US government?
Patrick, that is a great question. And before joining the government, I used to work in the private sector. I had worked at a law firm in Puerto Rico, helping a lot of foreign clients operate in Puerto Rico, mostly businesses. So when I joined the government, I already had a significant amount of experience from the private sector. And I was coming in thinking of my former clients, issues that they had faced, issues they had encountered. And I was coming when I worked on regulations, when I worked on cases, when I worked on examinations, audits, I was coming from the idea and the vision of how will we make this work? I know people's businesses are on the line on the other side. We really have to simplify the process. We have to get them answers. Because one of the biggest issues people often face is like, we need an answer. We're not trying to evade taxes. We just want to do it the right way. And the reality is that the US tax rules are very complicated. So being on the inside, I was able to see firsthand from agents, from policymakers, how things happen, how is tax policy implemented, how are cases handled. And that has given me an ability to work from the outside and help clients and friends find solutions to their problems. And in most cases, the best cases that I like is proactive planning, avoid potential issues, get ahead of any potential question you might have, before it becomes a nightmare that keeps you up at night.
So talking about proactive planning, how come some of our clients that are moving to the United States, whether it's on the E2 investor visa or other non-immigrant visas like the O1A talent visa, or even green cards like the EB5, EB1A, EB2NIW, how can they be proactive to move to the US in a compliant manner and potentially in a tax efficient way as well?
The biggest issue that I see is that some things people focus primarily and almost exclusively on the visa planning. The reality is that when you're moving into the US, you also have to take into account your tax planning. The US has one of the most complicated tax systems, and it has worldwide taxation. So once anyone becomes a US resident, either because they have a green card or they have what's called for tax purposes substantial presence, they will be subject to these rules. That means that even if they own assets in their home country or their prior residences, that might be subject to the US tax once they establish residency in the US. So you have to think of both worlds at the same time. You have to think about, am I getting the right visa that would allow me to work? And what are the consequences with respect to the work that I generate and any other assets that I have? So proactive planning could typically look like examining the assets that the person has before they become a US resident and potentially planning to put them in a situation in which they will not be taxed at aggressive rates, or you can avoid some taxes altogether. For instance, the US has an estate tax with a top rate of 40%. Once someone becomes a resident of the US, all their assets, regardless of where they're located, they could be France, Argentina, Mexico, they will be subject to tax on the day after their passing. However, before they become residents of the US, they could plan either by moving the assets to a corporation or some other type of entity. They could use a foreign trust. And those are some of the proactive measures that you could do before someone becomes a US resident. It is interesting to note, it is way better to address these issues before you become a US resident, because once you become a US resident, it is very expensive, and sometimes it's almost impossible to address these planning structures.
And Jorge, I understand there's some circumstances where you're kind of like in a limbo where it's even worse, where you bought a house in your name, you're on a E2 visa, you're not a green card holder, you're, an Argentine national residing in the US, and I think you don't get some of the benefits, right? If you were to pass away in terms of going to the heirs, and you're kind of stuck in the middle there.
For immigration purposes, you become a resident of the day of the effective date of the visa. But for tax purposes, the rules are different. This means, for example, if you're a foreign person, let's say you're from Argentina or from Spain, and you go to New York and you spend New Year's in Times Square seeing the ball drop, if you become a resident of the US in June or July, because that's when your visa came through, for US tax purposes, you're likely going to be a resident from day one, from January 1st when you saw that ball drop in Times Square. So you have to take that into account. However, let's say you did not spend New Year's in New York and you came halfway through the year to the US, because that's when your visa came through, that's when you were able to move your family and your kids found a school, then you might end up being a dual citizen. And then that's when you have to look at, am I going to be a resident of the US for part of the year? Am I going to be a resident of the US for a full year? And the US has a number of tax treaties with many countries that avoid double taxation. Those rules are very complicated, but it's not something that's impossible, and you can plan proactively. If you have a strategic plan as to when you want to become a resident, you can look into those issues beforehand and define when you want to become a resident so you avoid those complicated situations that you've described.
And I know for some of our clients, like for inheritance tax purposes, as well as just general income tax, if they've done it correctly, coming from Europe to the US, certain European countries, as well as Canada to the US, again, if it's done correctly, they're paying less taxes in the US than if they had just stayed in Canada.
Absolutely. One of the things that you have to examine when you become a US resident is how are the US rules going to impact any other assets that you have? For instance, the US has what's called the passive foreign investment company rules. So you might have a small interest in a family-owned business in some foreign country that for the longest time you didn't think it would be subject. And honestly, you might not think that when you become a US resident, it might matter. But the US rules do actually impose a tax on those structures, and they can be very punitive. So proper planning beforehand, and some planning could be as easy as filing a form with the US, which would not have a tax cost, could lead you to a better outcome and less reporting, less taxes, and better sleep.
So, Jorge, tell me some of the common mistakes that international investors, entrepreneurs make before moving to the US, or even just tax misconceptions.
Patrick, the biggest issue that I see is that people think that tax planning is only for the wealthiest. The reality is that the U.S. international rules are very complicated, and they will affect and impact anyone. It doesn't matter whether they're very wealthy or they are about to get wealthy, or they just have some simple assets, or they just have a simple job as an employee of a company. The U.S. imposes reporting rules that require U.S. residents to file very important forms for assets abroad. For example, if you have a bank account and on any given day has more than $10,000, you have to report that. So, tax planning is not, it is for everyone, and it should be hand in hand with planning moving into the US.
Jorge, you've worked a lot in your native Puerto Rico as well as other U.S. territories. I was just at a conference in the UK, and there were people promoting moving to Puerto Rico because all the fiscal benefits. How can some of the visa franchise audience, where maybe Puerto Rico wasn't on the map, benefit from some of those key opportunities, and also what are the challenges that those investors, entrepreneurs should consider before they make the move to Puerto Rico and base their family and business activities there?
Patrick, for many years, Puerto Rico has had a very strong incentives culture. Since the 1950s, big manufacturing companies, big pharmaceutical companies have set up shop because they get preferential tax rates. And that has shifted a little bit given other global efforts. But most recently, I'd say in the last 10 years, Puerto Rico has extended tax incentives to individuals that provide export services. What that means is the island will give very preferential tax rates to startups, to people who export services, and the tax rates are around 4%. This has led to a very significant incubator environment where a lot of young or not that young folks have moved and permanently relocated to the island, and you have all these incredible people thinking of brilliant ideas regarding AI, crypto, modern and novel technologies. And it's a very, very amazing environment for anyone who has an idea and they want to be surrounded by this great group of minds that can export, and develop further thoughts. Plus, when you sell your business or when you grow your business, you get very, very preferential rates. As an individual in the U.S., the highest tax rate is 37%. If you obtain a visa to come to the U.S. and you live in Puerto Rico, you would effectively be taxed at 4%.
And yeah, you still can get a green card, get U.S. citizenship, generally with a business or investor green card after 5 years. So, and it's a nice place to live. We have a lot of water sports and rich culture.
Yeah, the caveat there has to be people have to move to Puerto Rico. They have to be there for at least 180 every 3 days a year. So, factors to consider, you really have to move to the island. It's not about planning and saying in paper that I live there. The IRS looks very closely at this, so the benefits are massive, but you really have to follow through. It is worth exploring.
How do you see international tax evolving, especially for our clients coming from abroad to the United States?
Patrick, for the last 50 years, it's been a race to the bottom. Every country, every jurisdiction has been offering tax incentives, and they've gotten to very low rates. It has led to competition in ways that was not planned for. And what we have now is an effort to raise the minimum tax worldwide. At this point, the target goal is 15%, but countries have been pushing back and forth into how do we get there? And the landscape has been shifting. You can see an effort by different jurisdictions to continue to provide incentives, like Puerto Rico. They have a very incentive favorable jurisdiction, but they're getting pushback from these other countries. And the OECD currently has a group of around over 140 jurisdictions negotiating on the table. So it's really a global effort. For startups, however, for smaller entrepreneurs, this is not necessarily any immediate concern. The rules will apply to companies that make a significant amount of money. And hopefully our client startups, friends will end up there. But at the moment, it is in the early stages. But what we can see is that there is a global effort to increase taxes to around 15% and require more substance in jurisdictions in which they allocate earnings.
And Jorge, you mentioned the foreign trust and that can apply. And there's, clients coming from all over the world to the United States. We've helped 65 plus nationalities move to the United States. What are some other, strategies that families investing in the U.S. might want to consider to protect the wealth across borders, as many of these families will keep assets in multiple jurisdictions.
When an individual becomes a U.S. resident for U.S. tax purposes, they will be subject to estate taxes, gift taxes in the U.S. So some of the typical planning structures or planning ideas that you evaluate with people before they move to the U.S. is that says, like, do you have children? What assets do you have? How do you wish in the future, always looking to the end, how do you wish the future would look like for your family? And some things making proactive steps before you become a U.S. resident could be a way to address the impact of being subject to these rules. For instance, if you have a company, maybe you can gift some shares to your children before you become a U.S. resident. But also note that if the children become U.S. citizens or U.S. Residents, they will also be subject to these rules. So you really have to plan around what you want and what are you willing to do. Like the case of Puerto Rico, if you want the benefits, you have to move to Puerto Rico. In the US, if you become a US tax resident and you're here for a number of years, and then you decide to go back to your home country, wherever that is, depending on the amount of time that you've spent in the US, you might also be subject to an exit tax. So the idea would be to plan ahead, what's typically called step up in basis, or get assets out of your net by either transferring over to your children or a foreign affiliated entity with some planning. And then you mitigate the potential tax consequences of a sale or a future disposition on your day of passing, that you know what to expect.
From what I understand, if you're a U.S. resident, the first 15 million of basically inheritance, there's no tax. So like a married couple would be 30 mil. Does that apply for everyone that moves to the U.S., or is it something you have to kind of dig into the tax treaties and maybe their foreign government's going to want a bite at that gift or that inheritance tax?
The U.S. has an income tax, which once you become a U.S. resident, will tax any income for any source from any location in the world. So if you set up a business in the U.S. and you generate income from that business, you will be taxed in the U.S. on that income. If that business has operations abroad, the U.S. will also tax that income. The U.S. also has state and local taxes that they are not at the federal level, but they are at the state and municipal levels. For example, states like New York and California have significant state and local taxes, while Texas and Florida don't for individuals. But the U.S. also has estate taxes. And as I said earlier, the top rate is 40%, but there is an exemption, which is around 50 million at the moment. And it was recently extended thanks to the recent U.S. tax reform bill. Otherwise, it would have gone down. But at the moment, it's about 15 million per spouse. So if you're married, filing jointly, you get about 30 million. And with the passing of one spouse, the other spouse, if proper documentation is filed, they can maintain that exemption. So typically, if you're around that ballpark figure of assets worldwide, you might want to look into this. Or if you have the potential of having a very successful startup, those are things to think about. Planning around that basically involves moving the assets to different entities to get them out of your estate. So if you have your business, rather than owning it directly, you can transfer the ownership to an affiliated entity, which is the one that has the assets.
Jorge, can you think of any of these tax treaties that you worked with in the past where there was a pretty positive benefit for the investor when they came to the U.S., when they moved investments to the United States, rather than if they just invested in their local market and stayed in their local market, paying those local taxes, whether it's in Germany, UK, France, wherever?
Patrick, tax treaties are overwhelmingly complicated, and it's noteworthy to point out that all tax treaties are different. Tax treaties generally are formed or follow some standard model treaties, but these are negotiated by the Department of State and the Department of Treasury and the governments of each of the countries. They take a very long time, and then they are ratified by the Senate. But tax treaties are intended to avoid double taxation. They are intended in part to foster economic growth, business relationships. There are also commerce agreements that we have, like the USMCA and others, but tax treaties will generally provide you a beneficial outcome. For instance, we in our firm Procopio, we work a lot with Latin America, in particular with Mexico. And as you know, the U.S. is a really good market for investment. Private equity firms want to buy U.S. companies. Private equity firms, hedge funds, they prefer to buy a U.S. company rather than a company in a foreign jurisdiction. So one benefit of having a treaty, for instance, the U.S.-Mexico treaty, is that you can have a U.S. holding company of a Mexico entity, and the distributions out of that Mexico entity, as long as the U.S. entity owns more than 80%, they will not be subject to withholding. If you did not have that treaty, those distributions would be subject to withholding in Mexico, and then that structure would not be efficient. So it is something really worth looking at, and tax treaties can be very beneficial. You do have to look at them very closely, but they are intended to avoid double taxation, and they usually work to your benefit.
So we have a lot of technologist clients that are going through our U.S. Talent Accelerator program, generally getting the O1 visa, and then later on the green card EB1A. So for those early stage folks, I imagine you would be quite helpful because there's there's obviously a huge tax consideration, especially if they're raising capital, that there's a 5 to 10 year time frame where there's going to be an exit. And does it make sense to have that in their home jurisdiction when they're looking to expand to the US and some of their investors are coming from the US, or just to do a clean slate and do everything out of Delaware or whatever state makes the most sense with their C Corp to kind of have a clean slate, given that all this global capital is here, and like you said, they prefer investing in US based companies.
My take on this is always think with the end in mind. It is very important to not undervalue yourself and think big. What is your goal? What do you expect to get from your baby, from your product, from your business, from this thing you've created with a lot of sweat and effort? The U.S. has this amazing structure of investors, think tanks, and opportunity for companies, and I cannot understate the importance of being proactive and doing proper planning before you become a successful business. In addition to thinking about U.S. tax considerations, any startup, any tech company, anyone founding a business needs to understand their local tax consequences and the local tax considerations of the value in their product. For instance, you start off in a garage. You were one of these tech companies that started off in college with some friends, and you built this phenomenal technology that will solve many of the world's problems. If you leave and you move that intellectual property out to the U.S., your home country will also want to get a piece of that value. They will also want to tax that exit. So international tax planning moving into the U.S., it's not only focused on the U.S. It requires a lot of coordination, both from the home country, any other jurisdiction that might be involved, because it might be your buddy from college. You're an American, he's from Brazil, but the guy who's really good at coding is from Spain. You all own a share of that business or that idea. You really need to think about local consequences, and it's better to do it early to avoid any potential surprises from your home country. And some countries are very aggressive. They also have their own exit taxes. They will also tax the transfer of IP or ideas or businesses. So in my mind, the advice would be proactive. Don't wait till later. Get ahead of it and think of the end in mind. What do you want to do with your business? Where are you going to raise capital? And it's always good to invest beforehand because you will see the value. It is going to be less expensive to plan and have a good structure that works from the get-go than trying to fix it once you've built this idea that's worth millions of dollars.
And we're seeing this, Jorge. I know you're tracking it. All these UK companies, like I think in the UK stock exchange, they've raised like 200 million, where the US is maybe it's 200 billion or something like that in terms of IPO and capital raises, and for the NASDAQ, New York Stock Exchange. And that seems to be the continued trend where people, are starting companies in Europe or Latin America, but pretty fast, or for some of them at a costly mistake, moving too late to the United States market to raise that capital and potentially have an exit. So I know, you've spoken to a few of our entrepreneur clients and worked with them, but I can't echo enough to the audience how important it is to do this early. And Jorge, if someone maybe is early stage or they're not comfortable with their local counsel, do you have a network of tax attorneys in these different countries that you can tap into to really understand the other side as well?
Patrick, with time, it's just become a common thing. We have, and I have personal contacts in so many jurisdictions. These deals, these transactions take a long time, and you just build these relationships and you foster these contacts that if they are not the right person to assist, they will point you in the right direction. But there's a lot of good people out there, and it takes a lot of courage. Like, does your local counsel understand what you're trying to build? Do they understand your product? Do they have the international understanding of the rules? To me, it's like a puzzle. You have to make the pieces work, whether it's Brazil, the United Kingdom, Spain, Argentina, the US, and you have to find a group of trusted advisors. And in my practice, I have built those relationships. And there's no single deal. As you said, these businesses take 5-10 years before they are sold, and that's how long these relationships last at a minimum.
When you're doing pre-immigration tax planning, when does it make sense to work with a tax attorney like yourself, and when does it make sense to work with a CPA, or is it something that's always kind of should be done in parallel?
Patrick, in my toolbox, I have a big Rolodex of international tax attorneys around the world and a big Rolodex of CPAs. We all work together. We all work together because we each bring something different to the table. A foreign tax attorney will bring the foreign tax consequences. The CPA will know what forms need to be filed and how will they filed, and they can do the pro forma so we can attest the ideas that we're proposing. If we go with the structure, what forms are going to be required? What is the tax liability going to look like? Maybe it's too complicated for the benefits. And CPAs and attorneys work hand in hand.
And Jorge, I mean, we've captured a lot today, and I'm grateful for the time you're taking with me and our audience. But is there anything that we didn't talk today that you think would be relevant for our network of international investors and entrepreneurs?
Patrick, I want to say it is to the best benefit of anyone moving to the U.S. to connect with an international tax attorney and a CPA who knows international tax. Not everyone does international tax. Not everyone knows the rules for international tax beforehand. It doesn't have to be a commitment to work or spend a lot of money. It's just a huddle, a quick huddle. These are my plans. These are my intentions. What should I be thinking about? And as you move forward, think about it as a trusted advisor, not necessarily a service provider. The way I see my clients and my contacts, I want to assist them. I want to have them enjoy their time in the U.S. I really strive when I have a good relationship with my clients. And there's nothing that I enjoy more than seeing them be very successful with their businesses, have a successful exit. I enjoy the process, and it doesn't have to be a tense situation. You know, we are here to help you. We are here to make you do it right. We are here to let you sleep. The best thing is, like, call ahead. Do not call me. I mean, you can call me when you arrive to the U.S., but that's not going to be ideal.
Yeah, better to plan these things early. And yeah, for a lot of our clients, they've already had success, or, you know, I know there are many that are in their 30s, 40s that they're going to have major successes as they continue to earn money from their businesses, potentially sell their businesses. So what you've talked about today, Jorge, is extremely valuable to us, and just want to thank you for your time. And what's the best way for someone to contact you if they could leverage some of your services and they're looking to move to the US and they have international tax questions?
Sure. So I'm really easily findable by email, jorge.oben@procopio.com. I'm also available on LinkedIn. I try to respond pretty promptly. You know, feel free to reach out. Happy to set up an informal call to touch base. And thank you for having me.
Thanks, Jorge. Really appreciate it.
Thank you.